Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here with your Friday morning pre-market webcast. Okay, today is non-farm payrolls. Number comes out, about an hour and 20 minutes, 8:30 a.m. Eastern Time. I want to show you a couple of charts. Usually I do these after the jobs report because for me, we don't game jobs in the room. I don't game jobs. And what I mean by gaming jobs, and anybody that's followed me for any length of time knows what I'm going to say is, we don't sit there at 8:29 in the morning, flip a coin and say, hey, you know what? My amateur but expert economic analysis tells me that the reaction to the jobs report is going to be X or it's going to be Y. Therefore, I'm going to throw a bunch of contracts down. Just go to Vegas, bet it on red, bet it on black, whatever. You have equal odds. What we prefer to do is let the number come out, find what we call the reaction range, upside and downside, and then you see, are you building higher lows off the range, lower highs? Do we break out above it? Do we break below it? Works great for jobs, works great for the FOMC. That's our approach. But the reason I'm doing this at 10 after 7 in the morning is because of all this band compression on the daily chart. We've basically been shelved for 3 weeks, okay? This little oval used to be a lot smaller, and I could stretch it back to here. We've shed all of this directional price, okay, up off of the first floor down there at 1981, 1982. And what we are left with is the tightest Bollinger Bandwidth since August of 2015, 1 year ago. We had major expansion out of that. And I'm not predicting anything. I'm just saying this type of compression breeds expansion. But you can see we had something similar going on here in August. And then you had the move down. So you get a move down, you get a move up, but you're going to get a move, okay, is my point. Okay, you're going to get a move. And I'm saying this on the heels of what has traditionally been a major catalyst. Now, maybe the market takes a job report, completely blows it off, and we continue to shelve. But what I want people to do is to understand that whoever wins this next move is likely to have some expansion. It's going to morph the market into either a complete buy the dips environment or a complete sell rallies environment, where one side or the other is going to have a clear advantage, and you have to shed whatever your thinking is about anything, jump on the horse of the winning team, and just ride it until it's done. Okay? If that happens to be up, then when we get these little dips in the morning, when everybody starts getting scared, you just have to go ahead and buy. Stick to your risk, stick to your size, don't do anything stupid, but understand that we've got all this compression, now we've got all this expansion. For whatever reason, price wants to go up. We don't care which way it goes. We're traders. We don't care. What we care about is handles. And if the handles are to the upside, we want to buy. Conversely, if the handles are to the downside, you want to be selling rallies. They do these little pops in the morning. You come in, short it, and let it do its thing. Okay? You cannot become stubborn. You cannot become ideological on the wrong side of an expansion tape that is going to get born out of this kind of compression. Okay? This is serious compression. It's going to bring serious expansion, and you're going to have to treat whatever the decision is of the market objectively, or you're going to get run over. Okay? So that's why I'm sitting here before jobs giving you my compression expansion speech, because it may not come today, but it's going to come soon. So we're going to keep watching this, we'll take it from there. They've been battling over the weekly pivot for the last 24 hours. We talked about this yesterday. So here's your weekly pivot, 64.60 resistance, but then they broke the floor, right? 41.5, higher low in RTH 47. Couldn't hold it there at the end of the day Wednesday. We spent Thursday, here's your QE popped it up to weekly pivot, lower high, and they couldn't get through. They've been grinding it up a little bit overnight. They're trying to get through now, but they still haven't been successful. So The jobs report is going to be the tiebreaker on who wins a weekly pivot. Whoever wins a weekly pivot is going to have the initial advantage for the expansion leg that's coming out of this compression. But, just when you think you know what the weekly pivot is, you don't, because starting, after today, we get a new one. But just understand that being able to seal 64 and then break 41 would be huge for the Bears. Sealing 64 and breaking 78 would be huge for the Bulls. Okay, but the battle right now, and it has been for the last 24 hours, has been right here. So actually since Tuesday. So and the key to trading is being able to identify what's the key area, right? Sell the weekly pivot here, here, here. Yeah, I mean, there's a lot of opportunities. Okay. All right. Everybody have a fantastic day. Be careful out there. Have a great weekend. Follow us at Twitter at Princeton Trader. Check out the website, princetontrader.com. Come check out the chat room. For Monday, I may be traveling. I'm going to be traveling, so I may be able to. Next week, I'm traveling. So I may not be able to do a webcast every single day, but I'm going to do a webcast whenever I can. All right. So if I don't see you Monday morning, the pivot report will definitely be out at a minimum. Be careful out there. Trade them well, everybody.